What if I told you that investing just a little money every month could eventually make you a millionaire without picking a single stock? It sounds unbelievable, but that's exactly what consistent investing in an index fund can do over time. Meet Jake. Every month, he invested just $200. No market timing, no stock picking, just steady, consistent investing. Most people think investing is complicated. They chase hot stocks, hoping for quick wins, but often end up losing. Here's the twist. Research shows that most investors fail to beat the market over the long run. Instead of betting on just one company, an index fund lets you own small pieces of hundreds of successful businesses. If one company struggles, the others help balance things out. That's the power of diversification, and it helps reduce your overall risk. The S&P 500 has historically returned about 10% per year on average over long periods, rewarding patient investors. After 30 years, Jake has invested $72,000. Thanks to compound growth, his portfolio could be worth more than $600,000. That's compound interest. Your money earns returns, and then those returns begin earning returns too, creating a powerful snowball effect. The earlier you start investing, the more time compounding has to work its magic. The market will rise and fall along the way, but over time, history shows a strong upward trend. The biggest investing mistake isn't market volatility, it's giving up before time can do the work. Open an index fund account, automate your monthly investments, and let time do the heavy lifting for you. Even $50 a month is enough to start building momentum toward long-term wealth. You don't need to be a stock market expert. You simply need the discipline to stay consistent. A simple plan, patience, and consistent investing can take you farther than chasing the next big stock. Remember, wealth isn't built overnight. It's built one investment at a time. Start small, stay consistent, and let time work for you. If you found this helpful, like the video, subscribe, and I'll see you in the next one.